Good morning. Today is Monday, July 24th, 2023, and I want to start off today by letting you know that registration is open. If you are a client of Capital Consulting Group, whether you work with me, with Dan Oshman, or Rana Grant, please consider this your personal invitation to attend our annual Capital Cruise Client Appreciation Dinner Cruise on Lake Minnetonka. This year, we will once again be on Alan Almo's. We will be on their Arabella boat, their Arabella yacht. It is one of Alan Alma's newer yachts. So for all the details, head on over to our website, RSVP today. We cannot wait to celebrate you on the lake. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks moved to the rhythm of earnings season last week, initially rising on positive earnings surprises and faltering later in the week on key earnings disappointments. The Dow Jones Industrials average rose 2.08%, while the Standard & Poor's 500 added 0.69%. The Nasdaq Composite Index slumped 0.57% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, slipped 0.32%. Entering its first big week of the second quarter earnings season, solid reports from the nation's big banks rewarded investor optimism, sparking a rally that continued into midweek. An announcement by a mega cap tech company of a new AI subscription plan and stabilizing deposits at several regional banks further fed investor enthusiasm. Disappointing earnings from two big tech names dragged market indices lower on Thursday, with the largest losses in the tech-heavy Nasdaq Composite Index. Despite the reversal, 20 stocks in the S&P 500 touched 52-week highs on Thursday, with 11 reaching all-time highs. Stocks closed flat to end the otherwise mixed week. June housing reports reminded investors that any emerging housing recovery remains shaky. After a massive 21.7% jump in housing starts in May, new home construction tumbled 8% in June, with building permits, which are an indicator of future home construction, dropping 3.7%. Sales of existing homes were also lower in June, declining by 3.3%. Owing to a persistently low inventory level. This was the slowest pace since January. Year-over-year sales were lower by 18.9%. One reason for low inventory is that homeowners have been reluctant to sell homes on which many have a historically low mortgage rate and face buying a new home at elevated prices with a much higher mortgage interest rate. All right, if you didn't hear, last week, we got a report on inflation showing that it dropped quite a bit. So why was the drop in inflation such a big deal? Well, sometimes a picture is worth 1,000 words. So I decided to include an image of the June Consumer Price Index report to help put inflation in better perspective. Core CPI, which excludes volatile food and energy prices, rose just 0.16% for the month, the lowest reading in more than 2 years, and a significant downside break. There are a number of reasons why it was such a big deal, including it was a downside surprise compared to the consensus estimate of 0.3%. On a year-over-year basis, 0.16% translates to 1.92% inflation on an annual basis. That's pretty incredible. Also, it may give the Fed some flexibility with interest rates in the second half of this year of 2023. In June's Producer Price Index, which was released the day after the June CPI or inflation report, rose less than expected, building on the optimism about inflation. Now, I don't put too much weight on individual reports. We use a weight of evidence approach. So at this point, I'm looking for more information before drawing any conclusions about the economy, inflation, and interest rate. I will note, however, though, that we started this year, 2023, with our theme being Wag the Dog. And what we were saying and have been saying for about 9 months now is that inflation would come down, the Fed would stop raising interest rates, and we would, if we had a recession, it would be a very mild one. So far, things seem to be progressing exactly as we saw them as long as 9 months ago. But inflation is tricky, and people can have different experiences with rising prices depending on their spending habits. So please contact me if you are concerned about inflation. Reports showing inflation is trending lower are great, but your experience with inflation matters most to me. All right. We do keep our finger on the pulse of what's going on in the markets. And in this week, we have a lot going on. So, this week's economic news that we are keeping our eyes on includes the Purchasing Managers Index, the PMI composite flash today. Tomorrow, we have a consumer confidence report. Wednesday, we have the FOMC announcement, new home sales, GDP, jobless claims, and then Friday, personal income and outlays. The next day, busy earnings season continues. You can see a lot of different companies reporting. So again, if we're not investing your life savings for you, I invite you to learn more about our personalized approach at smartmixportfolios.com. All right, that's it for today. Thank you for staying until the end. I do have another riddle for you. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. All right, this week's riddle is: sometimes you pass me slowly, yet other times I fly by. Sometimes I slip away. Regardless of how slow or fast I am, one thing's certain: when I'm gone for good. So what am I? Again, be the first person to post the correct answer down below this video in the comment section, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, please visit our website /riddles for those. And then lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. This week's tax tip is about tax tips specifically for side gigs. So if you've had or have a side gig, be sure to pay attention to this week's update. If you'd like this email and you're not getting it, please head on over to our website where you can subscribe, www.investwithccg.com.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.